Hi, I'm Louis. Time.com, a telco counter with rising profits and share price. Is it worthy to be invested? Profit and dividend distribution. Between financial year 2012 to 2021, Time.com's revenue, profit before tax, and profit after tax were all trending upwards. Likewise, it is shown in this figure that between financial year 2012 to 2021, Time.com's earning per share was also on an upward trend. Time.com started its first dividend distribution in 2014. Since then, dividend distribution has been consistent and the amount of dividend distributed also increased in tandem with rising profits. In the last few years, Time.com's dividend yield mostly ranged between 2 to 4%. In 2015, Time.com distributed a large amount of special dividend, which caused the dividend yield to rise up to over 10%. In financial year 2021, Time.com's dividend yield was 4.6%, which was slightly higher than FD rates. In the last few years, Time.com's annual dividend payout ratio was mostly around 50%. In 2015, Time.com distributed a large amount of special dividend, which boosted the dividend payout ratio to 250%. Management efficiency. Between financial year 2012 to 2021, Time.com's net profit margin was mostly around 30%, a better performance compared to other telco companies. Figure shows that in the last few years, both of Time.com's return on assets and return on equity were trending upwards, showing improved performance. Stock valuation. Between financial year 2012 to 2021, net tangible assets per share of Time.com was gradually increasing. During this time period, Time.com's share price was also increasing. It appears that Time.com's share price has some correlation to the assets value of the company. By comparing its share price and earnings trend, it is shown that there are also some correlation between its earnings and share price. Between financial year 2012 to 2021, it is shown that Time.com's earnings were increasing over time. Likewise, its share price was also increasing with time. This shows that the share price is influenced by the company's earnings to some extent. Price to book ratio is calculated by dividing share price with net tangible assets per share. Lower price to book ratio, especially lower than 1, is preferable. This shows that the share price is undervalued and has room for upward movement and worthy to be invested. Recently, Time.com's price to book ratio has been trending upwards, indicating that investors are raising their valuation on the stock, willing to pay a premium to invest in this stock. In 2021, the price to book ratio of Time.com rose up to around 3 times, which shows that the share price is at a relatively high point. PE ratio is calculated by dividing share price with earning per share, which shows the ratio between share price and the earnings of the company. If the ratio is very high, it shows that the share price is at a high point, which is not worthy to be invested. Between financial year 2012 to 2021, the PE ratio of Time.com has been rising, indicating that investors are having positive outlook on the counter and willing to pay more to invest in it. In 2021, Time.com's PE ratio was at around 21 times, indicating that the share price is relatively expensive. The market cap is calculated by multiplying share price with the number of shares. Hence, higher share price will contribute to increasing market cap and overall valuation of the company. In the last few years, Time.com's market cap has been on an upward trend, indicating that investors are raising their valuation on the stock. By considering the number of shareholders holding the stock, it is shown that between 2012 to 2019, the number of Time.com's shareholders was decreasing. On the other hand, in 2020 and 2021, the number of shareholders were increasing. Time.com is also well supported by institutional investors. Its largest shareholder is Pulau Kapas Ventures, holding 29.11% of total shares, followed by Khazanah Nasional Berhad, EPF, Kumpulan Wang Persaraan, and so on, also holding significant quantities of shares. Financial management and stability. Between financial year 2012 to 2021, it is shown that Time.com's capital expenditure spending ranged between Rm 150 to 350 million, indicating that the company has been investing significantly in property, plants, and equipment in order to expand its capacity and reach more customers. Between financial year 2012 to 2021, it is shown that both of Time.com's equity and debt level have been increasing over time. In the last few years, its equity to liability ratio was above 1, indicating that its debt is relatively low and its finances stable. Between financial year 2012 to 2021, it is shown that both of Time.com's current asset and current liability has been on an upward trend. In the last few years, its current ratio was above 1, indicating that the company's short-term debt level was low, and it is having enough funds to pay off its short-term debts. Between financial year 2012 to 2021, Time.com's cash flow was on an upward trend, indicating that the company's finance is on a stable footing. By considering its cash flow per share, it is shown that in financial year 2021, Time.com's cash flow per share was Rm44 which is around 10% of the current share price. In conclusion, in the last few years, Time.com was performing well in terms of having high profit margin and rising profits. During this period, its dividend yield mostly ranged between 2 to 4%. Time.com also has a low debt level and its finances is stable. Now its PE ratio is about 20 times. Do you think it is worthy to be invested in? Time.com's main business activity is providing telecommunications and connectivity services through its fiber optic network assets, which is able to link Europe, Africa, and Asia all the way to the US Western Seaboard. This business segment made up 74.5% of its total revenue. Its second business activity is providing cloud computing services through its data center. This segment contributes 24.4% of its total revenue. And finally, revenue from its voice services business contributes 5.1% of its total revenue. That's all for today. Feel free to share your thoughts in the comment section. See you next time. Bye. The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis, as well as follow up latest update information before making any investment decisions.